Well, it's time for our mortgage update for the month of April. A lot going on right now. I know not a lot of it positive, but we're going to try to break it down, see what Bill's thinking about everything happening in the markets and the volatility, and talk about how that applies to mortgage rates as well. It's all coming up. Welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage. Bill, we're in April, and we are recording this the day it's being released, and there's a lot going on. We could have timed out our update any better because it's not positive news, but there's a lot happening, a lot that people are talking about right now.
Yeah, absolutely. There's a ton going on, and I think center stage are the tariffs, and certainly a lot remains to be seen, right? We don't know exactly where this is going to take us, but in the early goings on here, what we've seen, at least from a mortgage perspective, is with the uncertainty that creates in the private sector, there's been a flight to safety in buying bonds, because anytime, as we've talked about many times, anytime that there's uncertainty in the market, money shifts from stocks to bonds. Mm-hmm. While a mortgage is essentially a bond is a loan. So in the early goings here, we've seen money shift into the bond market. It's not been a dramatic change in rates, but about 30 basis points today, which is probably about 0.1% in rate. But for one day, that's a pretty good move. What we need to really look at is what is the longer term trend? Does this trend continue? Does the market still feel like the tariffs are going to, slow down the economy? In which case there would be a further flight to safety in bonds, which could mean that 30-year fixed rate mortgages, those rates continue to decline and maybe even stay in a lower area.
Yeah, it'll be interesting to watch because, it's been tough, especially if you're someone that's trying to save for a home, right? Or you're on the verge of maybe purchasing a home. The uncertainty, I'm sure it does give some people some cold feet, right? In terms of, should I actually put this money down and spend this, large sum of money on what is oftentimes the most major expense for someone to do this because of what's happening right now. So I'm kind of curious if you're hearing similar things in your office there across country, or people talking about, well, maybe Bill, I should wait a little longer.
So what I would say is, to your point, a lot of this is so new that we have not actually heard tariffs hit. And here's what people are concerned about today is, if you look at your 401k, your 401k is taking a dip, right? I would say for anybody who is younger and has time to, wait through this market, I would say the discipline of investing right now would say you still want a dollar cost into those accounts. When it comes to buying a house, now is the time that you really don't want to pull money out of those accounts, because it's only when you sell the stock that you lose the money. When the account's down, we don't want to invade the account. So the goal here from a lending perspective would be, try not to invade the stock portfolio or the mutual fund or the 401k, so that we can weather the storm.
Yeah, and just looking at some of the data, from March, Bill, and I know you've seen this, and you can probably break it down a little bit more, but, mortgage rates continue to tick down a little bit, but, even homes going on sale into the market is up year over year by about 10%. So we're still seeing a lot of inventory, a lot of activity in the market, and with rates ticking down, I'm sure it will encourage people to still be active in terms of trying to find that home, because there's more opportunity out there.
I think you're exactly right. And what we've seen this year is a lot more homes came on the market in the month of March of 2025 than they did in March of 2024. If that trend continues, that by itself is a really good sign. We do think that people who were staying in the house longer than they wanted to because of interest rates, having that really low rate kind of locks you into your house. Those people, I think, have some of them have said, you know what, I've tried to wait this out. We thought it was going to be 12 months, 24 months. We're coming up to 3 years. I need to do something now. So I think a lot of those people have decided that they're actually going to give up that super low rate, get back into buying a house at market rates with the idea that hopefully they can refinance later.
Yeah, I think that is probably the plan for a lot of folks that are thinking about it right now. And I'm also was just kind of thinking about, even with all the tariffs, with that kind of being the front and center, the price of homes and materials and that sort of thing. I wonder if there will be a change in new home builders, right? If people are having to pay more out of pocket there, if that's going to maybe slow that area. And I'm also kind of curious if that impacts what mortgage options they might have, Bill. Are there creative ways to kind of get around that from your perspective as a lender for someone that maybe is looking to build a new home, but worried about maybe some of the increased costs and what it might have been now versus, maybe 6 months ago or so?
Yeah, I think that's a really important consideration, because materials, the cost of materials, and I think that there's, a lot of uncertainty around that as well, right? Mm-hmm. If the materials are made in the U.S. and you buy U.S., the tariffs won't apply. We all know that probably can't happen at scale or at 100% of the time. So materials are going to increase in the short term, which really means, A, can you afford the new payment? If the price of the house went up by 20%, A, do we have money to put down to cover that spread? And B, what do the payments look like? So these are the questions that you really want to, if you're buying new construction and that delivery date is out 6 months to a year, you definitely want to talk to your lender about those considerations. As far as a product standpoint is concerned, there are some ways that we can make homes a little bit more affordable with a temporary buy down. There are also, ARM programs, which right now aren't so pretty because of the way that the spreads are on the bonds and the yields. The short-term notes right now aren't creating enough disparity to where you would actually say, I'm going to, for a percent decrease, a 5-year ARM makes a lot of sense. For a 0.25% decrease, a 5-year ARM does not make much sense at all. So if those bond yields kind of straighten out a little bit, or there's more disparity between them, then maybe a 5-year ARM could be an option. And really, the biggest piece, Ben, always we go back to is, even if we have a cool product that helps weather the storm for a year or two, at the end of the day, we need to forward pace out a year and say, when that rate changes or there's an adjustment, or let's say that there isn't the market, the interest rate market, the bond market doesn't yield lower interest rates, is this going to fit into your budget? Right? We need to plan for the worst. We also need to plan for what's most likely to happen, but we also have to have that worst case plan. So if costs are going up and purchase prices are going up and rates don't change, can you handle this higher payment in the long term? How does that fit into your budget? That's super important.
Yeah, absolutely. So again, if you want to have those conversations, go to smartmortgageshow.com. You can get in touch with Bill there. Also, you can also call the office as well, 484-352-4151. And just, I know, kind of looking ahead through the rest of the year, Bill, I'm guessing the uncertainty will not go away anytime soon. We'll kind of see how things settle and what happens with tariffs, since that's the big news right now. But just kind of forward looking, what do you think in general this is going to do with, forecasts for rates? Have you seen people saying, something one way or the other, or is it just kind of, hey, the rates are kind of continue kind of where they are right now? Do you see a dramatic shift either way?
So all of this is data dependent, and the, connecting the dots, they change as we go. Okay. If we can continue to tame inflation, which is now in the 2% range, we want to get down to 2% even. Okay. We're just under 3%. But if we can continue to tame inflation and the tariffs do not have a negative impact on inflation, the Fed and this current administration are really pushing to get rates to come down. We do think that interest rates are going to come down. The question is always when, and hopefully by the end of the year we'll see a 5. Maybe it's upper 5s, but we'll be in the 5s. And that's kind of where we see interest rates headed.
All right, very good. Well, if you want to learn more again, or just talk about your options, see what's available to you. You have a home, maybe you're interested in. Look, the homes are going on sale quite a bit here in spring. We're seeing more and more inventory on the market, per usual this time of year, but even increases over prior years as well. And with mortgage rates ticking down, maybe some more opportunities. So again, if you want to get in touch with Bill at Cross Country Mortgage, you can do so at smartmortgageshow.com. But we'll be watching this as we move forward. Bill, could make for an interesting few months for sure. Hopefully things will settle in, but either way, I know we'll be on top of it, and appreciate your info.
Yeah. And just, one last thing is that, our approach is, as the market's changing, we're changing strategy. We're always looking for how do we, optimize your scenario best based on where the market is and where we think it's headed. And certainly those conversations happen as we move through the mortgage process with you.
Very good. Well, you can always get in touch again, smartmortgageshow.com. We appreciate you watching. If you haven't subscribed yet, please do so. We'll talk to you again on the next video.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.